Hello everyone, this is the first video on individual income tax return. I am here to simplify Form 1040 for you. This is going to be the basic overview of Form 1040 from where items are reported on Form 1040. I will explain everything to you. So remember that it is important for you to understand the flow of Form 1040. So there are different items that comes to Form 40 from different places. For example, if you are a salaried individual, you will be receiving W2. So W2 is the form issued by your employer. So if you are a salaried professional, you will receive form W2, and that income from form W2 will be reported on line 1 on your form 1040, which is your individual income tax return. So this is the form, dummy form, that is of Mark Smith and Mary Smith. They are married individuals. So they are married, so their filing status is married filing jointly. So depending on your situation, your filing status could be different. It could be single, it could be married filing separately, which means that you are married but for some reason you are filing separately. It could be head of household, or it could be qualifying surviving a spouse. We will be discussing in detail about all the filing status in future videos. So Mark Smith is a salaried individual. His employer has issued him Form W2 and his gross wage is $85,000. Let me show you Form W2. So as you can see over here, Mark Smith, this is his Form W2 issued by his employer, and his salary is $85,000, which appear on Form 1040 on line 1. So now that you understand that this $85,000 is of Mark Smith and he is a salaried professional, he gets W2 from his employer. But what about Mary Smith? So Mary Smith, she does not work for any employer, she does not get W2, therefore her income will not be reported on line 1A. So Mary Smith, she is a businesswoman, she runs her own business, and that is why she has to file form Schedule C. So her income will be reported on Schedule C, and through Schedule C that income will appear on form 1040, but it does not directly appear on form 1040. So let me show you form Schedule C first. So this is Schedule C, and if you see, this is of Mary Smith. So this is her Schedule C. She runs some business and she generates some income. So her income will be reported on part 1 income line. So she has 145,000 gross income, but if you are in business, you can deduct expenses related to your business. So she has gross income of 145,000, but for generating that gross income, she would have incurred a lot of expenses like advertising, expenses like depreciation, expenses like taxes, payroll taxes, travel expenses, uh, the wages that have been paid to employees. So Mary Smith, she would be having a lot of employees, so she paid wages to them, and these expenses sum up to 75,000. So if she has gross income of 145,000 and if she has expenses of 75,000, which leaves us at 70,000 of net income. So where will this net income be reported on form 1040? That should be your question. So let us see form 1040. So do you see anywhere where we have shown 70,000 income? I don't see anywhere. So where did we report Mary Smith income? So if you see this line, additional income from Schedule 1 line 10. So this is your Schedule 1 part 1 additional income, and if you see it over here, you will find business income on line 3. You don't have to memorize which line business income is reported on, but you can find that number 70,000 over here. If you remember, Mary Smith income from business is 70,000, and we will attach Schedule C and we will report 70,000 over here on Schedule 1. If you remember, on this form W2, Mark Smith had 85,000 as his gross wages. This form is issued to him by his employer, and this 85,000 directly show up on form 1040 line 1. But whatever Mary Smith has as her net income, 70,000, this was not directly shown on form 1040 page 1. So we cannot find 70,000. So this 70,000 has a stopover which is called schedule 1. So if you go on schedule 1, you will see 70,000 over here. Why is that? Because if you see form 1040, there is only one page, right? So you cannot show everything on this page. So you can directly show this 85,000 which comes from W2. There are other items over here as well. For example, uh, see, IRS wants you to tax on any income that you generate unless that income is specifically excluded. So your salary is not excluded, so IRS will tax you on that. Any interest that you generate, so there are tax exempt interest, there is taxable interest. We will get into tax exempt interest as well, but right now, like for example, interest that you generate from your bank, so that is, let us say, 10,000. So this will again be reported on schedule B first. So schedule B reports your interest and dividend, and then it directly goes to page 1 of 1040, unlike business income. So so your 85,000 is your gross wage, 10,000 is your interest income, 2,000 is your dividend income, which is again first schedule B, and then from schedule B it directly goes to 1040 page 1. Then there is other form of income as well. For example, IRA distribution. If you don't know what IRA is, it is a retirement plan. So you invest, you contribute something to IRA, and then after a certain time you can take distributions. So IRA, traditional IRA distributions are generally taxable. So in this case that is 9,000. So this 9,000 is taxable. This is your income. So you have all these income combined. So these incomes directly show up on form 1040 page 1. And then there is this additional income. This income does not directly show up on page 1 because we have schedule 1. And the reason why this does not directly show up on page 1, rather, there are other items as well. Everything gets combined and then we report it on this line 75,000. All these incomes got combined, and this 75,000 you will find it on form 1040 additional income. So let us see what we have on schedule 1. So on schedule 1 you will have your business income, which we have already discussed, 70,000. We have rental real estate. So if you have got real estate and if you are renting your real estate and if you are generating income from your real estate, that will be reported on this line. Again, you don't have to memorize the line, but you need to know, like your business income will show on schedule 1 part 1, your rental real estate will show on schedule 1 part 1 additional income. This is the stopover. It You will file form schedule E. So this is your schedule E. Your rental real estate income you will report on this line. Rent received 32,000. So if you are renting something, you will be having some expenses as well, and you are allowed to deduct those expenses. For example, advertising expense, supplies, insurance, commission, taxes. So all these expenses you can deduct from your income. So after deducting all these expenses you get 2,000. So $32,000 was your rent. 30,000, as you can see it over here, is your total expenses. Ultimately you have 2,000 as your income. So you fill out this schedule E form. You have 2,000 as shown over here as your income from renting real estate. This 2,000 will flow to, you can see it over here, schedule 1. So let us go to schedule 1. So this will flow to schedule 1, this 2,000. So for business income, first report it on schedule C. From schedule C it has a stopover at schedule 1 part 1 additional income, 70,000 reported over here. Similarly for rental real estate, first fill out schedule E. In schedule E you will show your rent received, you will show all the expenses for the renting that you have done, and then you will have your net income from rental real estate. That will have a stopover on this schedule 1 part 1 additional income. All this income gets combined, then total income from additional income schedule 1 part 1 will flow to form 1040 page 1, and it will be shown over here. Unlike wages which directly appears, unlike interest income, dividend income, IRA which directly appears on your Form 1040 page 1. So let me quickly talk about schedule 1 what other items of income is reported. So there is this list of items. Let me quickly say in this example we have income from gambling. So you did some gambling, you got income from that. Do you think IRS will not tax you on that? IRS will tax you on that. So this 2000 you need to report on schedule 1 part 1 additional income. If you had any debt, if that was cancelled, that is still your income. IRS will not let you go. So you still need to report that $500 as an income again. If you get prizes and award, that is also an income. There are situations when that will not be considered as income. We will discuss that in future videos, but generally if you receive any prize and award, that is your income. So all these income will add up, all this income, and this $75,000 will show it on Form 1040, this line. There is one more thing that I want to discuss, capital gain or loss. So if you have a stock and if you have sold your stock, you can have short term capital gain, you can have long term capital gain depending on how long you held that stock. So you can have gain, you can have loss as well. So if you have loss, you can deduct up to $3,000. We will discuss this in future video as well, but for the basic overview perspective, you need to know like losses is limited to $3,000. So if you sum up all these numbers, you get this 178,000. This is your total income. So will you be taxed on 178,000? Is this your taxable income? The answer is no. So you need to differentiate between few things. So this is your total income, but we will arrive at adjusted gross income as well, which is different from your total income. And then from your adjusted gross income, there is going to be some deduction, and then you will arrive at your taxable income. So this is your total income 178,000. There is some deduction 31,446, and then you have your adjusted gross income, which is 146,554. Now from this adjusted gross income, you will have some more deduction, and then you will arrive at your taxable income. In the next video, we will discuss about those deductions.